We have Suvankar Sen, MD and CEO of Senco Gold, who is joining us. And Suvankar, good to have you on the show. Your smile is telling a
Yes.
lot, huh? Business is good. Though biggies like Mr. Birla is also planning a splash in the same segment. He just said that 5,000 crore worth of initial investment will be done. So Anisha and I were discussing that when biggies want to, launch their business in your area, what is the size of opportunity? I remember we were having this chat when you launched your IPO as well, and you said it's a simple, boring business, and that got excited. I mean, I got excited on that because money is made on simple, boring businesses, and you have made good money for your shareholders. So, how are you looking at the size of the opportunity from here?
So see, the point is that we all know the market size. It's a 7 lakh to 8 lakh crore size of the market in terms of the value that is being transacted. So that's quite a big size for many players to coexist together. And this whole endeavor of Mr. Birla and the group to enter into the industry is just a signal and a sign that the industry is getting more and more organized. So this story that we've been hearing over the last 5 years, 10 years, the shift from the unorganized to organized, I think that these are these actions and the events that we see in the industry that will help the industry to become much more formal, much more professional, much more organized. And I think everyone else will be able to learn from the best practices and the best initiatives that are taken.
So, Vankar, but are you worried at all about the competition? Because right from a Kalyan to a Titan to now this AB Capital Group and of course Reliance through its various ventures has been looking at expanding and tapping into this entire theme of unorganized to organized. In terms of your market share
Correct.
and the potential, are you worried or how are you looking at competition?
So see, there is a you can half empty or half full. Now, if you look at India as a country, it's got a huge potential. You can see that the urbanization is happening, the growth in the tier two, three, four towns and cities. India in the next coming 10 years, 15 years has a great potential of growth. The consumers are becoming much more evolved. The disposable income will be there. So therefore, I think that the market is only going to go big. And what you have seen in the gold prices, the kind of performance that gold as a category has happened in the last 2 months or so. Maybe in the short term, we are seeing that consumers are getting used to the prices. They are taking a little bit of a wait and watch, theory. But in the long run, the faith on the product, the faith on the category, the returns that they are getting, it is not just an adornment but also an investment. So therefore, the future potential of the market is increasing. So the worry in the sense that, in a 7 lakh, 8 lakh crore market, if you add up all the numbers of all the turnovers of the industry players, you will see that there is still a lot of scope and a lot of room for all of us to keep growing. As long as we are doing the fundamentals right, the basics right, maintaining the quality, maintaining, coming up with new designs, creating the excitement in the consumer base, I think that the market will continue to grow.
Okay, so that is one part of the larger game, the big opportunity, and you are growing there. Let's talk about micros. There was a very sharp surge in gold prices. You can say that, you just pass it on, but doesn't such a sharp surge in gold actually start impacting demand to a certain level at the retail end, or it doesn't?
It does. It does. See, what we have seen in the historical past also, whenever there is these sudden surges in gold prices, there is an immediate impact in the volumes. The quantity will go down. So if you ask me, Shavankar, how are you looking at the coming months? So at these kind of levels, we will see that there will be an impact in volume, 15 to 20%. Impact on volume will come because the gold prices have gone up. The consumers do take some time to get adjusted to the price, their income, the expenses that they are bearing. So they will all have to get used to the idea. We can see two kinds of consumers here. One is that there are a lot of consumers who've got their weddings coming in their family for the end of the year, and they are panicking. They are thinking that today the gold price is at, say, close to 75,000. People are already talking of 85, 90,000. What if it happens? What if the war escalates? So in that whole panic situation, some of them are coming and starting to buy jewelry. And then there is this other set of consumers who are, loving the fact that the gold in their household, lockers and in their almiras, that is appreciating. So they want to buy something, but their budget is limited. So 50,000, 70,000, 1 lakh. So the quantity is getting impacted. We have to create lighter designs. And what we are also seeing with the increase in gold prices, 14 karat, 18 karat purity gold, with diamonds and stones. So that is another segment. So for us, if you look at it, that, in our last financial year, we've had almost a 30% plus growth in the diamond jewelry segment. And I think that, this year, with this increase in gold price, the consumers' interest and within their budget, the diamond jewelry as a segment will continue to grow for everyone.
Saw the growth numbers. I mean, you have shared very good growth numbers, and that too on the base of, you know, promising less but delivering more. So that's what Street likes. I want to understand overall, how many stores do you have right now, and why this franchisee model of yours in spreading in the neighboring states? How many stores do you want to add over the next 2 to 3 years? Not immediate 6 months, 1 year, but on a 2 to 3 year basis. What is the potential you're aiming at?
So, considering all our various formats, we have about 158 stores. And, very recently we launched one more store, the Cines, store, which is focusing on lab-grown diamond. But the focus on a strategic growth level is that we will continue to grow on Eastern India and Northern India. That is where we want to penetrate. And through the franchisee model, it just allows us to penetrate into the tier 3, 4, 5 towns and even semi-rural markets. And today, if growth has to happen, you need to take people along with you. So in the bigger towns and then the capital cities, while we will focus on having our company-owned, company-operated stores, we will look for potential franchisee partners who can become the brand custodians. And then accordingly, we will be able to penetrate the smaller towns. And I think that is where the game changer thought process will happen, in which in those smaller, usually the market is unorganized, and with gold prices increasing more and more, it will be difficult for a lot of people to maintain the various regulations, to get the capital for growth, to give the experiences. And with the increase in gold price, let me be very clear, and we are quite sure about it, that the consumer will need value for money. And that value for money will not only be in terms of discounts, offers, pricing, but it is also the experience that we are giving, the designs we are coming, the brand that we are building. So in all holistic aspect of it, I think that it will only help the organized players to grow in this kind of a scenario.
Sure, Suvankar. So just to kind of summarize everything that you talked about, you're saying that, of course, historically increase in gold prices results in a bit of a downtick in terms of the volume of take, plus the fact that the overall share of the diamond-studded, jewelry is expected to go up. So in context of that, what will be the overall ratio, the studded ratio for the company going forward, and what would it mean for the revenues as well as the bottom line and margins in that context? Because while the volumes will come down, I'm sure the value will go up. So net, where do you see the revenue as well as margins in the next 12 to 18 months?
So, in terms of diamond stud ratio, our diamond stud ratio for the previous financial year was around 11.8%, with which grew up from around about 10.8, 11% to 11.8. So that is the growth. And in the coming 3-4 years, our plan is to take it to upwards 15% or so. So that is how we want to increase the stud ratio. And, the margins that you make in the industry is from the making charges. So when the gold prices goes up, making charges, which is a percentage of the gold value, that will overall go up. So your cost will go up. Your income through the making charges will also go up, and consumers over a period of time will get used to it. Yes, in these short-term scenarios, to make the consumer feel confident on buying jewelry, offers, discounts, schemes, those will be obviously given to make the consumers keep coming to the store. But in the long run, your making charges is where you will get your margins from. And diamond jewelry, with the increase in diamond jewelry, the margins you get from there is a little higher compared to gold jewelry. So I think that over the long period of time, if you ask us, though I would say that, our PAT in the historical past has been in the range of 3.2 to 3.5%. And I think that I should, give you that idea and the guidance that the PAT will remain in the same kind of range as it has been in the past, because the brand will be built, there will be expansions, there will be investments that will be done. So I think that is how one should look at the business over the long term.
No, fair. That actually puts it in perspective as to what the prices, margins, as well as the growth and investment is going to be like. Thanks, Mr. Sen, for making time and speaking with us. Appreciate you joining us on the show.
If you like this video, then like, share and subscribe to ET Now.